5 stocks, 1 list, and we start today with the cheapest one first, because sometimes the smallest price tag hides the biggest story. Stay until stock number 1, because that stock has made 5 separate acquisition moves in the past 3 weeks alone. Let's get into it, and if you want a list like this every single week before the crowd finds it, hit subscribe right now. This is not financial advice, always do your own research. Let's go. Stock number 5, 29 cents. That is what this stock costs today. 29 cents. But here is what is happening inside this company right now. This is a fintech company building a fully integrated platform for trading, clearing, settlement, and banking all in one place. Their target customer: small and mid-sized financial services firms, brokers, fintechs, trading businesses, the kind of institutions that the big banks ignore, and in the past 3 weeks this company has been moving fast. April 13th they filed regulatory applications to acquire a profitable, well-capitalized Federal Reserve member bank. April 24th they signed a letter of intent to acquire a securities firm and its broker-dealer subsidiary. April 30th they signed their 5th correspondent broker-dealer agreement. 5 moves, 3 weeks. Revenue grew 52% year-over-year. Their subsidiary Wilson Davis remains consistently profitable, and they just achieved positive equity after a full balance sheet transformation. Wall Street analyst price target $1, that is 241% upside from 29 cents. Next earnings May 14th, 2026. Ticker H. NYSE American. Stock number 4, $1.73. Most people know this brand. They have seen the cameras on helmets, surfboards, race cars, and mountain bikes for 20 years. But what most investors are missing is what this company is becoming in 2026. They just launched the Mission 1, a professional compact cinema camera targeting high-end content creators, 8K video, 4K recording. A full accessory ecosystem, shipping May 28, 2026. It won 3 major awards at NAB Show 2026, the most important media technology conference in the world. And then something unexpected happened. The company announced they are actively exploring defense and aerospace opportunities, working with a major consulting firm to map out rugged imaging use cases for military and government applications. NASA is already using their cameras on the Artemis II mission. The CEO bought shares at current prices with his own money, and earnings are coming May 11, 2026. The stock has already doubled from its April low of 74 cents. And yet at $1.73 it is still available for less than the price of a coffee. Ticker GROW, NASDAQ, stock number 3, $1.29. This company makes chips, but not the chips you are thinking of, 5G chips, IoT chips, the kind of semiconductors that power wireless routers, mobile hotspots, connected devices, and satellite communication systems worldwide. They have over 120 patents, partnerships with Verizon, Samsung, LG, and Globalstar. And on their most recent earnings call, the CEO said something that stopped analysts cold. They have locked in a 1 million unit plus order from the world's largest satellite communications provider. 1 million units, and the CEO called that the low-end shipments begin in the second half of 2026. 2 analysts cover this stock, and both rate it strong by analyst price target $3.50, from $1.29, that is 171% upside. Business update and Q1 results coming May 12, 2026. Ticker GTTS NYSE, stock number 2, $2 Canadian. This one is different from the others on this list. This is a Canadian company listed on the Canadian Securities Exchange, but the opportunity they are chasing is 100% American. This company is exploring rare earth elements and niobium across North America, Nebraska, British Columbia, Ontario, Quebec. 4 projects, all targeting the critical minerals that the United States government has identified as essential for technology, defense, clean energy, and national security. $3 to $5 trillion of U.S. economic activity depends on rare earth elements. China currently controls the majority of global rare earth supply, and Washington is actively pushing to change that. This company was just included in the newly launched Sprott Rare Earths ETF, one of the most respected names in the natural resources investment world. And just this week they reported strong new drill results at their flagship Nebraska project, including a zone of 23.7 meters grading over 4% rare earth oxides, a southern step out that significantly extends the known mineralization. Analyst price target $3.72 Canadian dollars. From $2 Canadian, that is 86% upside. Ticker APXC Canadian Securities Exchange. And now stock number 1, $5.29. This is the most expensive stock on today's list. But do not let that number fool you, because what this company is doing and where it is priced relative to what it is worth makes it one of the most compelling setups on this entire list. This company provides AI-powered software to the property and casualty insurance and automotive repair industries, over 35,000 customers, 106% net dollar retention, meaning existing customers are spending more every single year, gross margins of 41%, a rule of 50 operating score, which in the software world is exceptional, and a total addressable market of over $35 billion. 11 Wall Street analysts cover this stock. 7 say buy, 4 say hold, 0 say sell. The average price target $8.12. The highest target set just last Friday is $14. From $5.29, that $14 target represents 165% upside, 165%, from a company with 35,000 customers, growing recurring revenue, and 41% gross margins. The market has priced this stock like a struggling business. The operating results show something completely different. Ticker CCC Nasdaq. Now here is the full summary. Stock 5, a 29-cent fintech company making 5 acquisitions in 3 weeks. Analyst target $1, May 14th earnings. Stock for a $1.73 camera brand launching professional cinema cameras, exploring defense and aerospace, with NASA already on board, May 11th earnings. Stock 3, a $1.29 5G chip company with a 1 million unit satellite order confirmed, May 12th business update. Stock 2, a $2 Canadian rare earth explorer just added to the Sprott ETF with fresh drill results extending a major Nebraska deposit. Stock 1, a $5.29 AI software company with 35,000 customers, 11 analysts, and a high target of $14 representing 165% upside. 5 stocks, 5 stories, all with real catalysts happening right now. Now let me be completely honest, every single one of these carries serious risk. ACH is a micro-cap burning cash. Grow has declining revenue. GTTS is pre-revenue at scale. APXC is an early-stage exploration company. And CCC, while profitable, is facing margin pressure. These are not safe investments. You could lose everything you put in.